Imagine understanding options trading without complicated charts, confusing formulas, or financial jargon standing between you and the markets. That is exactly why this series exists. Over 60 episodes, we will build your understanding from the ground up. You do not need to be an experienced trader to begin. We start exactly where most beginners start. Maybe you've heard words like calls, puts, premiums, Greeks, and implied volatility, but never understood how they connect. By the end, those words should no longer sound like another language. They will become pieces of one system. But before strategies, we need to answer the most important question. What exactly is an option, and why does it exist? We begin with the foundations, understanding how options work and what actually happens between buyers and sellers. Then we meet the two basic building blocks of options trading: call options and put options. From there, we explore strike prices, expiration dates, premiums, and the three worlds of ITM, ATM, and OTM. You'll discover intrinsic and extrinsic value, and why an option's price can behave very differently from the stock. Then comes a skill every serious options trader needs: learning to read an options chain without getting lost. But understanding the contract is only the beginning. Next comes the question: what actually moves an option's price? That takes us into the Greeks: delta, gamma, theta, vega, and rho. Explained through simple, practical examples. You'll discover why delta changes, why theta quietly works against buyers, and why volatility can transform an option's value. Then we enter one of options trading's most misunderstood worlds: implied volatility and the mysterious phenomenon called IV crush. We'll compare historical and implied volatility and uncover the basic logic behind the famous Black Scholes pricing model. Once those foundations are in place, we finally move into strategies, where everything you've learned begins connecting. You'll see how long calls, long puts, covered calls, and cash-secured puts create completely different risk and reward profiles. Then we go deeper into spreads, including bull calls, bear puts, bull puts, and bear calls. And the further we go, the more advanced it becomes. Straddles, strangles, iron condors, butterflies. But knowing a strategy is not enough. You also need to understand probability, expected moves, liquidity, volume, and open interest. You'll learn why a trade can look attractive on screen, yet become surprisingly difficult to enter or exit. Then we tackle what many beginners overlook: what happens after you enter the trade. We'll explore position management, rolling options, early assignment, expiration, and pin risk, because the trade changes after you enter. Eventually, we reach something more important than any individual strategy: risk management. We'll examine position sizing, portfolio risk, profit-taking, and why protecting against one major loss can matter enormously. Then comes the battle no chart can solve: psychology, where fear, greed, impatience, and overconfidence can change decisions. This series will never promise guaranteed profits. Options involve real risk, and understanding that risk is part of mastering them. Our goal is different: understand the mechanics, recognize the risks, and develop the knowledge needed to think more clearly. 60 episodes, one connected journey, from the basics to advanced concepts. Welcome to the Options Trading Mastery Series.